China's transformation from a closed society into the world's second biggest economy has been spectacular. From shoes to shampoo, it is now both a key importer and exporter. But in spite of China's size, its currency, the renminbi, is still a minnow on the world stage. China wants to change that.
Hong Kong is a starting point for the renminbi's global expansion. In only 2 years, the city's fast-growing renminbi market has attracted companies from Tesco to Unilever to issue so-called dim sum bonds, named after this traditional Cantonese snack.
Pierre Gav of Hong Kong-based research house Gavacal says we're at the start of an epic shift in the structure of the global monetary system, one that could have big effects on trade, investment and politics across the world.
Well, it's very important because this is the first real step that China does in order to open up its system to the rest of the world and its financial system. And it desperately needs that in order to continue to grow at a sustainable pace. Now, for the region as a whole, it's also very important because it means that over the longer term, they'll be less dependent on the US dollar. It makes far more sense for them over the longer term, because they trade more with China than they do with anybody else, for them to sort of move towards a renminbi-dominated world.
Beijing's core aim is for Chinese companies to settle their import and export bills in renminbi to reduce their reliance on the US dollar. Just 3 years ago, almost no international trade was done in renminbi. But by last year, after a series of reforms, China was settling about 9% of its trade in its own currency. Lisa O'Connor, director of renminbi internationalisation at SWIFT, the payments network, has been tracking its rise.
Well, the RMB is the fastest growing currency on the SWIFT network. We have over 1,000 financial institutions in 90 countries transacting in RMB, and they are doing this based on their client or corporate customer demand. And the corporate customers are demanding this because they have the possibility of saving time and money when doing business in mainland China if they do it in RMB. We actually expect that this will continue as a trend as China takes more positive steps towards liberalizing their capital account.
For the renminbi to become a global currency like the dollar or euro, foreigners will need much greater access to Chinese financial markets. At the moment, flows of renminbi to and from the mainland are still tightly controlled by Beijing.
It's very important that China opens its capital account, because a lot of the central banks that could consider renminbi as a reserve currency have said that they will not until it's convertible under the capital account. So this is a key condition. However, it seems that China is taking very small baby steps in that direction. The process seems to be moving in the right way, but there's a lot of obstacles they need to take care of. And it's primarily because opening the capital account would mean losing control over their interest rate policy, over their currency to some degree, and they want to avoid that. That's why we think that the whole process will probably take up to 10 years and will involve, in particular, liberalizing the currency policy and liberalizing the interest rate policy.
The internationalization of the renminbi is by no means inevitable and could take decades. But in Hong Kong, the financial sector is already buzzing with excitement. Many believe that what has happened so far is but a drop in the ocean compared with what is to follow. Robert Cookson, Financial Times, Hong Kong.